Hello, everyone. Tim Davis coming to you guys with a weekend market review. Didn't get a chance to do one last week, so I wanted to definitely carve out about 15 minutes of my time to give you guys one this morning. So I'm gonna start straight out with the VIX. I'm gonna jump right into it to show you guys the indices, and I'm gonna have to be out of here. But paying attention to the major indices, you're paying attention to the world and economic, world and local, world and U.S. economic news. You know that there's a lot of what's going on that's causing our markets to sway up and down. But if you look at the overall VIX, here's a daily chart of the VIX. One thing I want to point out is that we're still in a bear market, first of all. We're still in a bear market. We're going to have these bear market rallies. And every time we see the VIX have these, and it's been this bear market, time we see this long stretch of red in the VIX, normally there's an ensuing rally that normally follows at some point. Look back to almost every one. Right here, back in March, hit a long period of red in the VIX, and then all of a sudden, a decent sized rally. And then right back in May, there was another period of red in the VIX, then another decent sized rally. Then a bigger one in June, from June to about August. About the end of August, beginning of September, a long stretch of red in the VIX. And then another VIX recovery. We had a test of this this area that the VIX got up to. This has been a strong area where the VIX has been running into resistance here all throughout this year. So every time we get up around this level, VIX has been running into resistance and been pulling back. So we did it here, here, and all these other areas that I labeled. And every time the VIX got to that level, it would test. This time we had a double test over this past between September and October. Test this level, pull back, test level again. Then we had a long stretch of red, which is what we are in the midst of now. But one thing I want to point out on this particular run, or this particular period of red that the VIX is in now, is that look how oversold we are now. We have not been at oversold in the past 2 years, or past several years. The VIX has not been that oversold, or that overextended to the downside. By looking at the RSI, now this RSI reading is below 20, and I mean well below 20. And that could spell a strong bullish setup for the VIX moving forward. So I want to point that out real quick after I remove some of these drawings, that the VIX is setting up for a possible strong rally between now and possibly before the end of this month. We had to see how this pans out. And then we had to see what happens after sell. But right now, you can see how oversold the VIX is in RSI. Extremely oversold. That VIX, that reading is about 16. Once you drop below 30 in RSI, that's considered oversold. We are deeply oversold in RSI. And you look even closer, not only are we deeply oversold in the RSI, but if you take a look, clear some of these. You take a look at the long stretch of red candles we have in the VIX. Long stretch of red candles. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 days of red. 15 red candles. 15 straight days of red in the VIX. Do we think we're going to go out to 20 and 30 days of red in a row? I doubt it. I think we're going to find VIX is going to find some support around here soon. These are some levels that we can be watching for areas of support. Right here, right where we're at now, right around this 24-hour level, we could see the VIX bounce here. Then we have to see what happens, because now that the 20 per moving average is above price action in the VIX, is more than likely going to act as a temporary area of resistance. So we could see a bounce in the VIX back up to this 20 per moving average. Then we have to see what happens then. Do we get a move back down, find some resistance somewhere, and then get a bounce? We have to wait and see. But I do think the VIX is going to find some resistance, some support here soon after 15 days of red candles, and we are in deeply oversold territory according to the RSI. So do look for a bounce in the VIX. Then we have to see if it rallies up to this 20 per moving average and reverses, or if it rallies up to that 20 per moving average and breaks right through it, like we did here. And like we did here. So there's a chance that we can rally up to that 20 per moving average and break straight through it, or rally up to that 20 per moving average, get a small pullback, and then a reversal to the upside. Nevertheless, I think the near-term picture over the next couple of days, maybe in the next week or so, that I think whatever the case may be, I think the VIX is going to find a way to find some support and hold that support level, and maybe make it run and jump back above its 20 per moving average and make it back up to some of these levels of resistance. So we have to see how that pans out over the coming week. One thing to point out, we do have elections going on this week. So that could also be a catalyst for the market either way. Maybe up until the election day, we could see further downside on the VIX, or a real rally in the overall markets. Then we have to see what happens after that, because I think we have a CPI report coming up too soon. So a lot of volatility is still in our market. So we could continue to see these wild swings one way or the other. But right now the VIX is deeply oversold. So I would be in favor of seeing a VIX, believe that we're going to see a VIX pop eventually and a market pullback eventually. That's what the VIX looks like. Now let's hop right on over to the S&P. Here's the S&P 500. And one thing I want to point out is that the S&P, of all the major markets, folks, are trying their best to hold a hold a support level, because they do not want to break down below the highs of 2020. And I'm going to switch to a weekly chart to show you guys this real quick. So here's where the VIX stands. Here's where the S&P stands right now on the weekly chart. And here is the highs of 2020. And here the market is starting to run into some strong areas of support. Almost got down close to that level, but then the market's bounced. So looking at the weekly chart, we are hovering right just below the 20 per moving average. So this 20 per moving average is acting as a huge test for the S&P 500. So we're in an area where we're going to see price some, a strong stand by the bulls and a strong stand by the bears until one of them gives way. Either the bears give way and shoot the bulls much higher, well above 20 per moving average, and break out above previous areas of resistance, or the bulls are going to give way and start to see the markets drop and eventually drop below these highs of 2020. So these next couple of weeks are going to be very, very crucial. Towards the end of the year, it's going to be very, very crucial. Which way will the market go? Will we break out above these levels of resistance, or will we break down below these levels of support, or will we stay in a range? That's also another scenario. We could stay in this range, this tight range. We could stay in this tight range. Could stay in this tight range for a minute. We got to see what happens, but there's a battle between the bears and the bulls. See who's going to give up first. That's a look at the S&P weekly and daily charts again. Here's a one-year daily chart of the S&P and it is battling with this 20-period moving average as well on the daily. So, all right, let's take a look at the Dow Jones. Same thing. Dow got extremely overbought on the daily chart, pulled back, and now it's trying to retest. But this is creating a look at the RSI. It's creating. I can't do it there. It's creating lower highs in RSI. See how we're creating lower highs in RSI? So we could be looking for a possible stall here somewhere. Maybe a little bit more on the upside, but then we could be pulling right back. So we have to see how this pans out as we go through this week. But the RSI did get severely oversold. I'm sorry, overbought on the Dow Jones over the past month. It got a little overbought. So could be in the midst of a pullback. So that's the Dow Jones. Now let's switch right over to the NASDAQ. Let's see, NASDAQ. NASDAQ has been the weaker of the bunch with this risk of recession and inflation woes. It's just putting a heavy pressure on the NASDAQ, and it's not even joining some of these huge rallies that the other markets are seeing. As you see, the NASDAQ is staying muted on this daily chart right below its 20-period moving average, and it just cannot get back above this major resistance. And I think if we look at a weekly chart of the NASDAQ, it's just been in a straight downward trend. And if for some reason it does not hold where this price action is now, I could see the NASDAQ really, I mean, these next 2 weeks could be really crucial, folks. We could see the NASDAQ really break lower. If it breaks below this 10,000 level, I could see the NASDAQ with folks really shooting off to the downside. We could see prices really tank and drop below the highs of 2020 in a big way and fast. So that's what I'm looking for. Now, we could possibly see that between now and December, folks. We break this level where we at now in the NASDAQ. We can see this thing really accelerate to the downside, drop below these highs, and no exaggeration, we can see the we can see prices go down to on the NASDAQ 9,000, maybe even lower, if price action doesn't hold and rally back above this 20-period moving average in a major way and get back out to 12 or 13,000. We can see a major inflection to the downside on the NASDAQ before we see the inflection on the others, or the major inflection on others. But that's what we got forward to look for in the NASDAQ. Take a quick glance at the Russell 2000. And the Russell 2000 also a weakling of the bunch. Looking at this weekly chart, back up to an area of resistance. And last week was a red week for all the major indices, even though we had a strong day on Friday. Last week was a red week for all the major indices, and they're butting their head right back up against a level of resistance. So this week is going to be a very interesting week with the election coming up. And I think, if I'm not mistaken, CPI data is coming out very soon. And as you can see, there's some mixed signals right around the 20-period moving average on the daily chart. So again, markets are in no man's land right now. I think the bears will eventually win out. That's just my ultimate opinion, because we're still in this bear market, folks. We're still in a huge bear market, and that has not changed yet. That's what I got to keep emphasizing. We are still in the bear market, and that has not changed yet. And looking at this monthly chart of the Russell, look at what's happening, folks. Price action is really trying its best not to drop below. This is 2018 and 2020. 2018 and 2020. Where we hit these levels and we pull back, hit these levels and we pull back. Then we got to rally above these levels. And look what's happening. Like we're just curling and rolling over. And now what's finally happening is on a monthly chart on the, and I like to look at the small caps, because Russell 2000 normally is a precursor of what's to come. Look what's happening with the 20-period moving average on a monthly chart. Once price action on the Russell has dropped below it on the monthly chart, it has struggled to get back above it. And here's the box on the monthly chart, the price action has been in. And look what's happened. We dropped below the 20 period moving average here. And since then, we have not made a huge attempt at it here, but could not get back above the 20 period moving average on a monthly. So this monthly chart is a key factor now. Will price action finally get back above a 20 period moving average on a monthly? If not, folks, we're going to see, start to see some real disappointing moves in the overall markets, especially if we break out below this box over the next 2 months or so. So, folks, again, this bear market is still here, no matter how strong these rallies seem. They may last for a couple weeks, last for a month, and then all of a sudden you get a reversal and it takes out all of that. So just be careful and be mindful of the way you navigate through the course of this bear market over the next several months, because there's still speculation with everything that's going on within our world and within our U.S. economy as well. There's a lot going on that's going to be cause and effect to this market. Is pay attention to inflation, pay attention to diesel prices, which diesel, there's some speculation that there could be some issues with the price of diesel, not only the price of diesel, but being able to have access to it at all. And if that becomes an issue, you know, we use diesel to use in our transportation system for some of the tractor trailers, for a lot of the planes, for a lot of the ships and boats. So you just think about it and imagine what happens if for some reason, you know, we start to see the inability to get a hold of diesel to ship products and goods as often as we normally would. Just some food for thought, and then pay attention to the gasoline prices, folks, because slowly but surely, everybody paying attention, it's on the rise again. Here's a monthly chart of crude, and look what happened on the monthly chart of crude, folks. Price action was on a tear from 2020 all the way up until we got to 2022. Then we started to pull back, and on this monthly chart, we are hovering right above the 20 period moving average on crude. And if crude starts to take off, continue to take off like it's been doing over the past week, folks, you can definitely see inflation really start to rear its ugly head, which is what I think we're about to see. I think we're about to see crude regain its footing and attempt to take out this 130 high, folks, over the next coming months. That would not be good for the overall market. So just keep that in mind. All right, folks, hopefully this is some good stuff that you guys can use. I will try my best to come back with you guys next week, record another weekly market update. And if things really get ugly during the middle of the week as we go through this week with the election and I think some other data coming out later on this week, later on next week, I may try to jump in here and give you guys a midweek update. All right, until next time, it's Tim Davis signing off. Enjoy the rest of your weekend, folks.